I'd like to welcome everybody to the panel session on tax transparency. My name is Michelle de Cordova. I'm the Director of Corporate Engagement at NEI Investments in Canada. As Benjamin Franklin once famously wrote, in this world, nothing can be said to be certain except death and taxes. But I think what we've discovered in an era of economic dematerialization, when we see more and more value being generated from easily transferable intellectual property, I think recent practice by some companies suggests that Ben wasn't altogether correct in the second part of his assertion, that taxes might not be quite as certain as death. When corporate tax avoidance began to hit the headlines 5 years ago at NEI, we began to try and engage on responsible tax alongside some of our US colleagues. And companies asked us what really were investor expectations about responsible tax. That was a hard question to answer at the time, so we were very pleased when the PRI brought together a group of investors from around the world who were beginning to explore this issue as a kind of tax task force. And since 2015, we've been exploring tax risks together and concluding that unsustainable tax approaches could pose a material financial risk to companies, as well as a sustainability challenge to society. That tax collaboration has worked on a couple of publications that I do encourage you to take a look at. One being an engagement guidance on corporate tax responsibility, and another a set of investor recommendations on corporate income tax disclosure. We've run in educational sessions, and currently we're also running a collaborative engagement on tax responsibility that is focusing on IT and pharmaceutical companies. Through that collaboration, we're looking at tax policy approaches, governance of tax, tax risk management, and also thinking about what companies should be reporting in order to support our investment decision making on tax. And if I'm correct, we have 35 investors in the group from 11 countries with assets around $3 trillion US dollars. So let's turn to today's session. We're going to try to explore what does tax transparency mean to different stakeholders? What are some of the factors that are shaping the tax transparency landscape? How does tax relate to the Sustainable Development Goals? And what kind of solutions are becoming available for companies to respond to stakeholder calls for tax transparency and responsible tax practice? So let me introduce our very distinguished panel on these issues. I'm not going to go into great detail on their bios because those are available on through the PRI's conference site. I'm going to turn here first to Rob Wilson, who is a research analyst at MFS Investment Management, whose very great insights on tax, certainly for me, have been a great learning experience within our PRI collaborative work. He's been a great asset to our task force. I'm also going to introduce Bastian, who is the Director of Standards at GRI, the Global Reporting Initiative. I don't think that needs a lot of introduction to this audience, but for anyone who's not familiar with GRI, it's an international organization that's pioneered sustainability reporting standards since the 1990s. Next, from the very front lines of tax responsibility, we have Christopher Rice, who is the Vice President of Tax Americas at the Shell Oil Company. I'm pretty certain Shell does not need any introduction to the audience. Next, we have Rajiv Joshi, who is the Managing Director of the Bteam, which may be a little less familiar to all of us. That's a not-for-profit initiative formed by business leaders who are seeking to make business a force within sustainability, as well as a force for profit. And then at the end there, we have Irit Tamir, who is the Director of Private Sector Department at Oxfam America. Again, I don't think Oxfam needs a lot of introduction, but it is a global civil society organization that is working to end poverty. So I wanted to start by asking all my panelists to start with a provoking thought for us on this issue. I'm going to ask them each for a very short observation that we might, on the tax issue that we might unpack during the panel. And I'm also going to sit down. Go ahead.
Okay, I'll begin. Again, my name is Rob Wilson. I work at MFS Investment Management. As an active manager, I guess the way that we've thought about this issue at the highest level is that quality companies are going to aim for the lowest sustainable tax rate. But I think the key word in that statement is sustainable, and what I hope we can unpack a little bit today is what does sustainability mean in this context? And I think importantly, it's not necessarily just what is maybe legally sustainable. It may also be a function of what our society's tangible and intangible needs and expectations, and how do we fund those things? So that would be my opening statement.
Thank you. Bastian.
Thank you. From GRI's perspective, I think we look at tax as one of these issues that are very quickly emerging on the horizon and have become probably one of the most high-profile ESG issues today. That's probably because of the inequality debate, but certainly also the SDGs play a role here. What we're trying to do is we're trying to induce some focus in the debate by providing a standard for tax transparency and bringing all the different stakeholders in the room to see what is the minimum expectation around that. What would good disclosure look like? And that includes investors, obviously also the companies, because we believe that this type of information is useful on both ends for the preparers as well as those that then use the information.
So, thank you. I think what's important is to bring into the conversation how corporations view themselves as creating shared value in society. And I think given the types of businesses that my industry represents, we can only do that in a sustainably looking at sustainable positions in the long run. As we look at the way that we create those sustainable and create value within the work that we do, we see tax probably in the last decade becoming more and more a big piece of the puzzle of that discussion. And so right now where we think about is that we'd like to bring that more into the discussion, because we see that if we can provide more transparency about the taxes that we use, it also puts back into the debate more information that societies can use and governments can use in terms of revenues. And so as we think about this whole idea of creating shared value, we see transparency as a way into a discussion that will give people proper information for the discussion. One of the things that we notice is that sometimes we have a debate, but we have a debate without facts. And so one of the things that we really want to think about is how, as corporations, we play a part in getting that information out there for a proper debate. And so today I hope we'll get into that a little bit, just talking about some of the issues that you face and also how you get on this journey, because it truly is a journey in terms of how you can get there to become more and more transparent as you look at sustainable organizations and corporations.
Hi everyone, Raj here from the Bteam, and privileged to be here also with my colleague Charlotte Blomstein. If you have any questions about our work, she's here at the front. The Bteam is here because we really believe it's time to redefine the role of business in society in addressing many of the systemic challenges that we face. And at the center of those challenges is the fact that we're seeing a significant decline in trust and a social fabric really fraying. And at the heart of that is the fact that our markets are failing in so many different in so many different ways, and taxation is one of the key tools that we have in our toolkit. And so we're very interested in the role that taxation can play in addressing systemic challenges, but also in first beginning with that first question of trust, and how can we begin to rebuild the trust that can enable us to start having the courageous conversations we need to be having between business, governments, and civil society about getting to a tax system that enables us to solve some of our systemic challenges.
Great, thank you. Apologies for my voice. I hope you all can hear me okay. As Michelle noted, Oxfam is an anti-poverty organization. We are not a tax justice organization, so why is it that we're interested in the issue of tax? Taxes provide revenue to developing countries that frankly dwarf any foreign aid that they may get. And corporate tax avoidance in particular is even more important for developing countries because they rely almost 2 times as much on corporate tax revenue than advanced economies. So for us, I'd like us to be thinking about how do we change the narrative of tax from a penalty to one that's really about investment in good roads and infrastructure, investment in schools and hospitals, in the things that allow countries to lift people out of poverty, but also, frankly, that allow business to have a good enabling environment to conduct good business. So I'd like to see us consider how we change the narrative on tax.
Great, thank you, Irit. Can you still hear me? Yes. So I'd like to take a deeper dive now into what's driving some of these stakeholders' interest in responsible tax. I'd like to turn to Rob first to give us an investor perspective. Can you tell us something about why MFS started working on tax, what you see as the risk and opportunity from an investor perspective, and maybe touch a little bit on some of the regulatory changes that might have influenced your interest in this issue?
Sure, yeah, so at MFS, we started really focusing more intently on this tax line item back in 2013. And the reason that we did is that a number of our analysts and portfolio managers would be looking at the companies that they would own, and they'd see maybe a 5, 6, 7, 8% tax rate, and they would say, wow, that seems low. So let me have a conversation with the management team, and often would sit down with the CFO and say, this tax rate seems quite low versus your peers and versus history, and is that sustainable? And almost invariably, what the CFO would say is, yeah, don't worry about it, it's fine, it's sustainable. And I think the challenge was back then, and is even still true now, is the fact that disclosure on tax-related issues in 10Ks and annual reports really was, frankly, quite poor. And I would say in general, investors didn't have a very good understanding of the ways that companies went about minimizing their tax rates. So it was hard to dig deeper with the CFO in that meeting. Now, that led us to then say, okay, well, what kind of research do we need to do? What conversations do we need to have? So as we dug into this topic, what we found is that this is a really rich source of information on both earnings risk and opportunity, and also governance risk. Because I think companies, what we found over the years is companies that are very aggressive with their taxes are also giving a very clear signal regarding the companies, the management teams, and the board's risk tolerance. And that's a really important governance signal to be looking out for. So you've got earnings risk and opportunity, you've got governance related topics that you can kind of really fine tune your analysis using this information. Now, it was also helpful that we had kind of done all this work because over the last few years, you have seen a lot change from a regulatory perspective. So a few years ago, you had the OECD Base Erosion and Profit Shifting Initiative. And that really did a lot to push forward the dialogue on country-by-country reporting, which is essentially a company coming out and releasing information either publicly or just to the tax authorities where they say, look, here is by country all of our revenues, employees, profits, taxes paid, essentially everything. So you can get a real good view, either as a tax authority or as a member of society, or from our standpoint as an investor, on what that company is doing from a tax perspective. So the OECD BEPS initiative, as it's called, really accelerated the dialogue on that, but it also actually started to roll back some common tax avoidance strategies, things like hybrid debt and equity structures. These are things that as investors you can identify and see, and again, from an earnings risk and opportunity perspective as some of these regulations change. In the United States, of course, we've had tax reform here as well, and everyone is familiar with the lowering of the headline tax rate. But of course, there's a lot going on behind the scenes as well, where all of us as investors can really glean more information about our companies by understanding how changes in interest expense deductibility and how some of the tax avoidance provisions in the new tax law, like the BEAT and the GILTI provisions, are going to impact companies potentially. Now, you've also had a number of countries that have looked to unilaterally enforce their existing tax laws more stringently. So a good example of that is Australia, which recently had a very large verdict against a large multinational oil and gas company, and is also looking at a number of other companies in regards to their transfer pricing. So a lot has changed over the last few years, and this research, I think, can really help investors understand that. And what I want to communicate here as well is the change isn't done. As you look forward, Europe is talking about a common consolidated tax base. And you have individual countries that are talking about implementing digital revenue taxes, things that would completely change the game from a taxation perspective, and things that I think investors really should take time to understand and appreciate. Now, the last thing that I'll say is that in addition to the regulatory changes, there's a lot going on as well in other organizations. So Michelle talked about what the PRI has been doing really since 2014 on this topic. We've got the Bteam and the GRI now also very invested in this. So a great deal is changing here, and I do think that this is an area where investors can really help themselves understand their companies better, understand earnings risk and governance better by really digging into this topic and seeing what the data and the information that is there can provide to you.
Thanks a lot. I'm not sure I might use this too. Thanks a lot, Rob. I wondered if I could turn now to Christopher to give us a bit of an insight from a company's perspective. Can you tell us something about Shell's tax transparency journey?
Sure. We're going to have to pass that one. How's that? Great. So as I stated before, this has been a bit of a journey, and just to share with you how the times do change in terms of how you look at tax, how we looked at it in the 90s and 2000, and it's a real progression. And I will say that we've been going through that progressive process over the last decade, really. We, back in 2012, we got our minds around voluntarily publishing information around all of the taxes that we pay and or collect in our largest jurisdictions. We refined that more and more. We published a bit on our strategy early on. And then in 2016, of course, the BEPS sort of requirements and EU requirements, we've certainly been a part of making sure that we get that information out as part of CBCR. We were founding members in the Extractive Industry Transparency Initiative, which requires us to submit information around the countries where we operate across the world. We're providing I wouldn't say excessive, a lot of information around what we do on taxes, royalties, and that sort of thing. And now we're part of this the Bteam initiative, and we're a founder member in there. So we've been on the process or on a journey, and I would just say maybe it's useful to talk about how do you get on that journey. I think one of the real ways that you do that is really having a tone from the top. We talked a bit about that yesterday. We had a tone from the top at the top of our tax organization, finance organization, and ultimately into our executive committee, where we had discussions about tax. Many things that, in terms of, if you look at many of the principles that GRI or Bteam, lots of companies are already doing a lot of that. There are strategies that are out there. There are risk profiles and a lot of that information. But you now have to get more forward-looking in terms of how we talk about it, how we get the information out there so people, investors, governments, societies can have real clarity about what we're doing and why we're doing it. Most everything that we do in terms of tax planning, the way we approach it is that it will always have the light of day. And so we approach it such that And so if that is the case, then we are prepared more and more to go through the process of getting that out. Now, it is a bit of a journey because you have to bring your C-suite along with you, and they have to then take leadership in that. And even in the organization, we operate across 70 countries. So how on earth do you pull all of this together in such a way that it's meaningful for such a wide swath of governments and societies in different places. So the thing I would stress is that it's important to get on the journey, but you must start it. And once you start it, the key I think that I would say is once we got real clarity from the top of our organization that this was important, it helped us to move forward with that. The other thing that I think helps us is that we see this created shared value as key because of the length, the life of our assets. I mean, we don't invest for the quarter, we invest for decades. And so it's important to get in systems that are sustainable over the long run. And again, we think that transparency and clarity about our part in the ecosystem of the whole environment is very, very important for us. Yeah.
Thank you. I think Christopher did touch there on on participation in the Bteam. So perhaps we could turn to Raj and start to look at some of the collective solutions for companies that are beginning to emerge. Can you tell us something about the Bteam tax principles?
Yeah, and thank you very much to the previous presenters. And it's been a privilege working, I think, with many of the companies, but also with GRI and many of the investor groups on this process. I guess I would like to start with why. I think the Bteam is a leadership initiative. We exist as a team because there are business leaders who really want to take this agenda forward and really raise the level of ambition on this agenda so that other groups like GRI can really translate principles into new standards that start to really raise the bar on where companies are going on an issue which is so close to the hearts of many and so critical to building trust. So we invested in this work because, firstly, the fraying trust, which I've mentioned, but secondly, because of what Irit mentioned, the fact is that in terms of accountability, in terms of the way in which citizens view companies, there's a real social contract in which citizens, governments anticipate that companies who benefit from hospitals, roads, schools, need to contribute in some way to how those systems are actually financed in that they provide talent, they provide healthy workforce, they provide access to or enable efficient movement of goods and services. And so we looked at it in terms of the fact that if we fast forward to 2030 in the Sustainable Development Agenda, and we know that we've got to really move society along a spectrum, and that we have 3.5 billion people who really aren't benefiting from the current system, and many countries in which infrastructure, health systems, education systems aren't where they need to be to unleash the potential of our global economy, then we really need to think carefully about how our tax system can be better structured, but also how can companies demonstrate and lead by example in paying their fair share of that tax burden. And then finally, we also looked at it in terms of not just the cost side of the equation and why companies have a moral responsibility to contribute to taxation, but also the opportunity side of the equation. And we were very involved in the Business Commission for Sustainable Development, where we did some extensive research and found that there was a $12 trillion economic opportunity in 60 new different economic markets that would open up if companies really invest in the Sustainable Development Goals. And so really thinking about taxation in terms of the opportunities that exist in the SDGs was a critical part of the equation. And in order to advance on this agenda, we recognize that the biggest gulf that exists is that civil society and business were in a very confrontational kind of relationship when it came to down to issues of taxation. There was a number of, I would say that there would be a number of dialogues that had taken place, but that hadn't really led to any real impact. And so what we began to do was create the space for civil society, including groups like Oxfam and some of the tax justice networks, many of the key institutions like GRI, OECD, and others, to sit together with heads of tax in many of the companies, and over an 18-month period, really map out what are, if we were to take our hats off and really pull back some of the constraints, what would getting to good really look like? and what are some of the key principles that we could really cluster and that we would really want to organize companies around. And we came down to 3 key areas of intervention. And the first was really around how companies approach tax management. So we have a set of principles and commitments that go with them, which really look at the questions around, do companies have a clear tax policy at the board level, which is publicly available and which people can easily comprehend and understand how a company really approaches tax management. The second area we looked at was the relationships that companies have with others. What kind of relationships do companies have with tax authorities? And there are, a set of commitments there. And obviously this is all available on bteam.org, or if you just Google, principles of responsible tax practice, the principles will come up, and I would encourage you to read them. The final area was around reporting to stakeholders. And this was really, I think, where some of the meatiest debate really took place, and where some of the most substantive thinking and most ambitious thinking really is, and it relates to things like use of tax havens, ensuring that companies are reporting and paying their taxes where their economic activities take place, that we have clarity around the effective tax rates of companies. And so when you look at the tax principles in their whole, they do represent, I believe, and many of the Bteam leaders, including Paul Polman and Oliver Betts from Allianz and Shell and BHP Billiton and many of the other companies, including Safaricom and others, there's around 12 multinationals now who have signed up, believe that this represents, the next phase in this journey towards a more responsible approach to tax management, which starts to begin opening up the questions around how do we start creating a tax system which is fairer, works for the many, not the few, and starts to enable us to deal with some of the systemic challenges.
Great, thank you. And I think that you touched on the disclosure aspect there, so I wanted to turn to Bastian to tell us a little bit about what GRI is working on the tax space.
Yeah, basically we're building on all these conversations, and we're really, our mandate is to develop standards in the field of disclosure and disclosure only. And what it is about essentially is bringing together the different stakeholder groups and finding out how these expectations that they have towards companies overlap, but also importantly, how business wants to structure the journey that Christopher was talking about. How do you actually get from no disclosure to something that is helpful to a range of audiences, including the internal, and how do you build that out as a journey? So what we've done is we've brought together a multi-stakeholder group, building again on the different discussions that had happened already. And interestingly enough, this is an issue, and that's not very common in ESG and also in our history in the last 20 years, where the stakeholders largely agree what the direction of travel is. Interestingly, also an area where the same information can be put to use by different stakeholder groups in different ways. But it is not really a large variety of different information requests that we're seeing. So that's a good thing because it helps structuring a debate, and I think that's the main point that I would like to make. With disclosure, what it mainly is the beginning of a debate, right? With tax justice, which is an inequality, which certainly from a societal perspective is one of the drivers here, it isn't quite sorted out what the role of business is, what's good tax practice, what's a good, we're not going in, GRI is not normative about this. What we're trying to do is to bring the information out and actually fuel the debate to the benefit of the companies and the stakeholders, and to see, so what's that new equilibrium that we're going to when it comes to corporations and behavior in tax.
So perhaps we can get a civil society perspective at that point. Could you tell us a little bit about Oxfam's perspective on this?
Sure. So Oxfam's been working on tax and revenue in a number of ways. One of them is on the policy front. So we recognize that in order to really fix our broken tax system, we're going to have better policies, both at the national and international level. And Oxfam's been working quite hard in many countries on that front. In addition, we have a program called FAIR, which stands for Fiscal Accountability in Inequality Revenue. And that program works in a dozen of countries in the developing world that really tries to lift up civil society and give them capacity to understand how to really hold their governments accountable for the revenue and how it's being spent. And then on the corporate side, we've been conducting tax dialogues, in some cases in partnership with Bteam, to really try to draw out forward-looking companies and lift them up as champions. Because if we're going to get policy change, we need companies who are willing to stand with us to get that policy change. And then finally, we've been putting out new research around companies that are notorious tax avoiders in order to get policymakers and the public engaged in this issue and understand what the problem is. And in fact, next week we'll be putting out a new report on a sector that's quite notorious for avoiding taxes.
Great, thank you, Irit. I wanted to turn the panel's attention, and this is going to be a challenge because I want them to deal with this in 5 minutes, a transparency idea that's become a great topic of debate that has been touched on already, but that's the issue of a country-by-country tax disclosure. Trying to get into the question of understanding where value is created and where the business operations exist. So in about 1 minute each, can you introduce to us some of the challenges and solutions that exist in that space? Maybe Irit, do you want to just give us a little observation from what you're looking for from a civil society perspective?
Sure. So, look, country-by-country reporting for Oxfam is the gold standard. That said, I know there's been a lot of consternation by companies around the OECD template, and it's not Oxfam's position that the OECD template is in fact the standard that we're seeking. Rather, what we're looking for is enough basic financial information at the country level to ensure alignment between taxes paid and actual economic activity. So we believe transparency is key. Country by country is important. Reporting is important. But we want to work with companies around what exactly that disclosure needs to look like.
Great. Rob, can you give us a bit of investor perspective on this question?
Yeah, sure. So what I would say is that it's very helpful to have information like tax policies and that kind of qualitative information from companies. But I agree with the comment that you need to have the data. And until you see the country level data, and you see that for each country in which the company operates, there have been a number of situations where companies are producing this information already, and it's interesting to me where you do read that some of the text doesn't seem to align all that way with the actual data. So I feel like you do need both the strategy, the qualitative information, but if you don't have the data, the country-by-country data, where you're understanding the revenues in that country, the employee base, the profitability, the taxes paid, these kinds of things, you really don't have the whole story, and that's why I think that is, again, kind of considered the gold standard, and I think certainly seems to be, again, where most individuals, from an investment standpoint, within companies, in other areas of civil society, seem to be heading toward as, again, the gold standard.
Great. So Christopher, you have the civil society voice and the investor voice indicating they were very interested to get some country-by-country tax disclosure. Can you tell us how companies are thinking of responding to this stakeholder interest?
Let me just first say you will get that country-by-country reporting information, it's kind of interesting, and I think it's important, and we certainly think it's important to get that information out into governments. It's often good to think about the purpose of the country-by-country reporting, because that was in place by governments to really focus on transfer pricing between governments. So it was built, and the way that it was built for governments' use for some specific instances. So I think there is information that is out there. One thing that we want to do is, as we work through the Bteam principles, is that we see that there is something there that we can use, but we're more interested in trying to tie the information that's out there and backup information to help understand the information. Because right now, I think people can get the information, and then do lots of analysis around it and try and glean some things. And I think there would be some insights in that. But what we're trying to say is we want to go a bit further in trying to find a meaningful way to marry this information in the CBCR into something that we think represents and gives people information that they can use to try and understand what's behind some of this. Because the numbers raw, they mean something. The numbers raw with some other information with it is actually quite interesting to get to a debate, to get to a discussion between companies, civil society groups, societies, and governments across that. So I think from our perspective, one way into it is we're working with the Bteam to try and figure out, and it's a struggle to get something that we see that we can all find that's meaningful and useful, that will be useful in the debate. And so I think that's how we will certainly produce it, but we're interested more in trying to think about what else behind that will produce it into governments, but we're trying to understand what we can utilize from that to have a meaningful discussion in a wider context.
So Raj, thanks Christopher. Raj, can you give us a little bit more flavor into that conversation that's gone on in the Bteam?
Well, this has all been a hot topic, and I actually think it's a testament to the journey and the trust that's been built along the way to hear Oxfam saying that, it's not our position that the OECD template is necessarily what we're looking for, even though we all believe that, CBCR is a gold standard. And I think that when we first began this conversation, basically we had companies sitting on one side of the table saying, we're not so sure that we can actually work with that template for a whole host of different reasons. And civil society saying, all we want you to do is CBCR, and we don't want to have that much of a conversation. And we actually able to move way beyond that into the depths of understanding what is the technical challenge of getting to meaningful information that actually helps to build trust. And so what I would say is, I would make 4 points. One, which is that, companies have already begun through the OECD process to file kind of CBCR information with tax authorities, and we do need to recognize that the purpose of the OECD template was to produce information that would be useful for tax authorities, which isn't necessarily structured in a way that would be meaningful for the public. And so one of the challenges that companies are pointing out is that they don't want to be providing an overwhelming amount of information that could also be misleading the public. And so there's a big question and a challenge that I think we all need to together work on, which is what kind of information would be meaningful in building trust and also providing the kind of transparency that is required.
Can I turn to Bastian on that? Because I think it would be very interesting to hear at this point something from the perspective of somebody who's been involved in the development of disclosure standards of all kinds on ESG issues. What does that debate look like from a GRI perspective?
First of all, I think if you look at it in context of the history of other ESG issues, this is not uncommon, right? If you have a debate about a detailed disclosure expectation, usually initially there is discomfort on various levels with it. And what we've learned over the years that debate around what is actually decision useful information and what is the right balance between quantitative and qualitative. That's certainly coming back here as well. I think what we are observing, because we homed in on country by country reporting mostly, I think in the debates with the experts, or what we are trying to do, is that this is definitely going to be reality. The question is, what exactly does this reality look like in 5 years' time or so, right? I think most of the practitioners are convinced that what the OECD has started will eventually also become a public disclosure expectation, and we're moving there. So what is it that we're trying to achieve here? And also importantly, is there an alternative of some kind to that country-by-country reporting? Technically, it is possible. It is very challenging, and I think this is where we have to look at also realistic expectations of moving whole industries that are currently not reporting. We have extractives predominantly looking at this at the moment. Other sectors are not reporting at all on taxes, other than maybe publishing a policy. So it's quite a learning curve there ahead of us. what we do believe is that with standard setting, we need to look at 5 to 10 years in terms of time horizon, and also sketch out what the aspiration is. Not to say that organizations in the first year need to meet the expectations in the standard in full, but rather provide this trajectory. And I think especially for country-by-country reporting, that is very important. And maybe it is also something where along the way we find out that some of the information and the detail that was asked for initially is not so helpful, or vice versa. There is more information needed. I think that's we're not going to get that 100% right, and with the first set of standards issued on this.
Okay. So let's just turn the discussion a little bit away from the disclosure to impact. A lot of us in the investment community are very interested increasingly interested in how we can contribute to the fulfillment of the Sustainable Development Goals. So what do you think is the tax linkage here, and how does tax relate to efforts to enhance, address inequality or support good governance or facilitate capacity building? Can you all give me no more than 1 minute of your perspectives on tax and the SDGs? Let's hit Irit.
Sure. Well, I can be very quick. You can't give with one hand and take with another. And essentially, when corporations engage in the SDGs, they can't be engaging on one hand in all kinds of programs and yet not provide revenue to governments to be able to also engage in the SDGs. The bottom line is, if we're ever going to meet these goals, governments need the revenue to be able to do it. It's as simple as that.
Fantastic. So, Bastian, what would your message to the investors be on the SDGs?
Maybe from an investment perspective, I think what you're looking for in relation to the SDGs is macro factors that tell you about whether companies are on average contributing to the achievement of the SDGs, and tax is an interesting one. I think whatever the companies do in terms of positive contribution, if you see tax practice that is at odds with the aspiration of aligning economic activity with tax paying, then that tells a lot about the overall contribution of the corporation. So it is one of the factors, much like living wage and others, that when you look at a portfolio and you want to assess SDG contribution globally, it's definitely relevant and it should be looked at much more closely.
Great. Raj, what would your SDG angle be?
Well, I would just say that we know that there's a $2.4 trillion financing gap to meet the SDGs, and you can't look at financing on the one hand without thinking about taxation on the other hand. And for me, this is all about incentive structures. The fact that our markets are failing in many different, we have market failure, and incentives like taxation are one of the best tools we have in our toolkit to deal with market failure. And we're here at the Global Climate Summit, and when we look at things like carbon taxation, when we look at things like, short-term taxations on short-term flows of speculative capital to deal with short-termism in the system, which is a big part of what's, making it very difficult for CEOs. When we look at the need to deal with, the future of work and the fact that our jobs are going to be, in many ways, replaced by automation, and universal basic income is a critical potential solution to that, we need to be really thinking about how we're going to finance this. And so warped incentive structures and the role of taxation in addressing those, I think, is something that we really need to be willing and courageous enough as organizations to be opening up that debate, which I think 100 years from now, we'll look back at these policy solutions and think they weren't really that radical, right, even though right now they do seem so.
Right. Christopher, what would, how does Shell's tax how can that contribute to the SDGs?
Yeah, so I think one of the things that I think it's about getting the information out there in such a way that societies can use that information in discussions with governments. So Shell probably in 2017, we paid or collected somewhere in the neighborhood of about $60 billion. $10 billion in tax and royalties, and the rest was collected on behalf of the governments. We don't believe that we just need to comply with the laws. That's important, and we need to do, that's the base. But we also think that we're in these, given the nature of parts of our business, we are in locations where we think it's important to help work with governments to build out that ecosystem of how we're working through businesses and for the governments. And we think that if we can get that information out there, it then gives us an opportunity to discuss what's going on. So it may not always be about the amounts paid, it's about how those revenues are used, and our society is clear about that. And so I think we have to approach it in two different ways in terms of looking at the sustainability of some of the things that we do in the tax area.
Great. Okay, I want to make sure we've got some time for questions. So to sum up, I think, what we've talked about so far, we have discussed how the tax issue ripples out from the risk and opportunity to the individual company to global and systemic impacts. We've heard a little bit about some emerging tax transparency initiatives and tools that investors could consider looking at and integrating into their responsible investment processes and perhaps become actively involved in. I'm going to ask each panelist to give us one thing, preferably short enough to be tweetable, which you can tweet if you like at #PRI2018. Your one takeaway for this audience on tax. Let's go with, Irit, do you want to start?
Look, Oxfam's very concerned about economic inequality, but we see it very tied to political inequality. And on the issue of tax, we know that companies are rigging the rules in their favor to be able to avoid tax. And it's one of the things that we think we need to tackle. Oxfam recently did a study that we put out last tax day where we looked at the top 70 U.S. companies. We looked at their lobbying disclosures for the Trump administration's first year in office. And what we found was that while they spent $1.5 million in lobbying on climate change, 1.5, that was the year that Trump was deciding whether or not to pull out of Paris. They spent $44 million on tax reform. So they got a good ROI on the investment that they made, because that's what they ended up with. We have got to tackle this political inequality as much as the economic inequality, and tax is almost at the heart of that.
Great. Bastian, what's your tweet?
I think it's two things. Investors should really start to engage around what the expectation is towards companies in terms of disclosure and join the debate. Comment on processes like ours. There will be a public comment later this year. And also put the data to use. I think the leaders in the space are waiting for that, also for the engagement of investors that come to the table and start to ask questions, because that will frame what they want to do going forward. So really actively engaging is important as well on this matter.
Raj, in 140 characters or less.
Very short. I'll be very short. One, I think that we should think about an economic P&L, moving beyond the financial P&L, which does integrate tax and some other issues. That may be something. And the second is just an Aboriginal quote that I just want to share, because I think this is about us working together. And yesterday, I think one of the colleagues mentioned mutuality. And Leela Watson, an Aboriginal visual artist, says, if you have come to help me, you're wasting your time. But if you have come because your liberation is bound up with mine, then let us work together. And I think investors, CEOs, civil society, we're all trying to figure out this issue as our governments. And we need to figure out that our liberation in terms of figuring out the new system is bound up with each other. And so it's going to require courageous dialogue.
Christopher, what do you have to say to the investors who might be wanting to engage on this?
Great. I would say that social responsibility is important for companies more and more. Certainly those of us who are at the forefront of this discussion. It's important, and transparency is a key way into that. And I think that the other thing I would suggest is that it's important for companies to get on the journey. And I raised that before because there is a process that you go through and a balancing that takes place as you go through that. And so I think we see this as something that will not end, and we see it as an opportunity to share more of our story, being clear about it, being clear about the choices that we make and why. And we only see that as a positive item as we look at the scope of our business.
Great. Rob, one last thought?
Sure. So I guess my last thought would be that I'm actually really quite optimistic on tax and the sustainability of it. And the reason I am is that, as we mentioned, this idea of sustainability in this area is based on society's tangible and intangible needs and expectations and global tax coordination and the legal versus the spirit of the tax law. I mean, there's a lot going on here, and these things are really difficult to balance under any circumstance, but they're particularly difficult to balance when you don't have good disclosure and when you don't have investors and companies and civil society talking about it. And so today you've got these groups coming together. Disclosure is absolutely improving. And I think that's really going to help us balance these things as a society, but just kind of echoing the call, we need to have more investors, at least from my standpoint, at the table, helping companies understand the perspective on this and how this kind of information and data can help them to better understand not just the company's, again, financials and governance risk, but also the impact that the company is having from a sustainability perspective.
Great. So please take a look at our tax collaboration on the PRI website. So we've got time for a couple of questions. If you could, if there's someone you particularly like to address your question to, could you indicate that as well as telling us your name?
Thanks to the panel. I hope the mic's working. Hugh Whelan, financial journalist and managing editor of Responsible Investor. Rob ended there on a positive note, and I guess as a journalist, I'd always like to throw that down to a negative note in questioning. But I wondered whether the panel had a view on what the real risk is here and whether that risk is changing, because the time I've spent in the pub with some of the best tax journalists around usually ends up in a frustrating conversation about the role of governments and their beggar thy neighbour tax policies that actually render quite a lot of this discussion neutral, in a sense that governments aren't doing enough to make the risk to companies and investors prevalent. And I wondered if something like the Archbishop of Canterbury's comments this week in the UK on Amazon not paying enough tax in jurisdictions around the globe could kickstart a much more dynamic conversation around taxation, around government collection of taxation, around investment in taxation collection, and whether you see that, or maybe even when we might start having a conversation on the tax arrangements of the financial sector as a whole.
Oh, now which of the questions do you want?
Well, I don't know.
That was a lot of questions.
Maybe a bit of everything, but I guess it's what's the real risk here? I mean, are we going to see public campaigns? Are we going to see governments starting to up the ante on tax? What's the real risk to the conversation?
What do you think the most material risk is? Rob, I think you look like you're going to
I'm not optimistic on answering that question in all of its parts, I guess. But I guess I'll point to a few things. First of all, I don't generally, I think reputational risk can be overused as a material driver from an investment standpoint. But I note that a lot of the companies that are very aggressive from a tax standpoint are also facing very important dialogues with society and with governments on other topics. So tech companies, internet companies, healthcare companies, drug pricing, right? I think where reputational risk becomes a problem is when companies start building up a lot of baggage of different kinds of issues. And I think we saw with financials in 2008 that society can very quickly turn against an industry, let's say banks, when you've suddenly been shown to maybe not be operating responsibly in a number of different areas. I have some other thoughts, but let me stop there, and I don't want to...
Anyone else want to give them, what do you think the most material risk is, Irit? With a mic that works.
Yeah, thank you. Look, there's two levels of risk here, right? There's risk to us as a society. Of the 100 largest economic entities right now, 69 now are companies, not governments. Think about that for a minute, right? Do we want companies running our society? And if we don't nip it in the bud, that is what is going to happen. And tax is a manifestation of this, because at the end of the day, the reason that this is an issue is because companies are rigging the rules. They can avoid these loopholes because they've written those loopholes, literally.
Great.
So there's that risk. And then there's the actual risk for companies. And Amazon may be a $1 trillion company, but it's going to have a hard time with its employees. Forget its customers. It's going to have a hard time, I think, with its own employees if it's not acting responsibly. I think they're going to see that from within. And that's what we saw on the immigration front, for example, in the travel ban with the tech companies. It wasn't just what was going on externally, it was internally in the companies. They were saying, this is not right. We don't want to be part of a company that won't call out the president on this. So we're going to have the same kind of dynamic on all these issues, because millennials, they care about these issues. That's what we know.
Great.
They care about these issues.
Thanks a lot. I did see, who's the next? Yeah.
I've got a mic, so maybe me.
You won.
Alison George from Regnan in Australia. Thank you for a really great discussion on corporate tax disclosure. I suppose it strikes me, as Hugh alluded to, that investors also pay tax. And they often have some pretty complex tax structures that are hard to explain simply, and maybe pass income through jurisdictions that might be labelled by some as tax havens. So I suppose, and in the climate change arena, we see the TCFD being a disclosure framework for companies as well as investors. And I guess I'm wondering, the question to all of the panel is, are investors thinking enough about their own tax responsibilities? And will we see change in tax disclosure for investors as well as corporate?
Does anyone want to try and give that a 30-second answer? Gonna go?
Well, maybe just from what we've been doing at GOI, is in principle the standard that we're developing could be applied by investors as well, right? And it probably should be, to be part of that debate that we've been talking about. There are nuances to it. You're pointing to specific structures that maybe only exist in specific industries, but the starting point is the same. Setting out an approach and evidencing how this approach is carried out globally, that the same questions can be asked about also for investors.
Great. Now I see that there are more questions, but we are coming up to time now. So please, anyone who's still got a question, by all means grab us after the session and grab your favoured panellist.
Michelle, could I just say something in response to the previous?
Sure.
Just quickly.
We have 30 seconds.
Okay. Edward Mason from the Church Commissioners. I've actually put out a sort of call for interest on asset owner responsible tax practice, because it's an issue that kind of we recognise. So if anyone is interested in that, please respond.
Is that on the clearinghouse?
It's
great. Have a look out for that on the clearinghouse too.
So
thanks,
thank you.
Thanks, Edward. Great. Well, we're really coming up to time now, so I'd like to thank our panel for talking about this tricky issue. As we discussed at the beginning, in this world, nothing can be said to be certain, but I do think it's certain that we're going to keep talking about tax for the foreseeable future. So thank you very much to the panel, and thank you for attending.